Here to give us a read on where things stand is Mark Shafir, previously head of global M&A at Citigroup. Had that job for almost 15 years, now a managing partner for investment banking at advisory firm Consello Financial. A longtime guest of mine, and obviously you've been doing this even longer than I have, been covering it. And that's really saying something, Mark.
Thank you for aging me, Dave.
You're welcome. But given that enormous wealth of perspective you have, I mean, where are the deals? Are they coming? You know, we came into this year, I would argue, with a lot of optimism. And other than a couple of those big oil deals, it seems like it's been pretty sparse.
No, I think that's right. The numbers are up. I mean, the quarter was about $800 billion, give or take, which is up substantially over Q1 last year. But don't forget that 23 was the lowest volume number in 10 years. So we have to balance it a little bit. I think when you get behind the numbers, heavily skewed towards mega deals, 10 of them were about 25% of the volume, 60% U.S. related. And by my count, about 4 of the 9 industry groups were down, sort of quarter over quarter. So I don't think you can say this is a broad-based recovery at this point. I agree with you. I think it's better than it was last year off a low base, but I would not call this by any means a broad-based recovery at this point.
Well, you know, we were just with our last guest talking about the election looming. You've got a very stringent antitrust regulatory authority. You know, is that going to mitigate the potential for deals this year, or is a relatively strong economy and even with our recent pullback in the markets, a relatively strong market going to actually instill the confidence that gets deals done?
Well, look, it's a mixed bag, right? I think we got geopolitical issues that are quite threatening. 40% of the world will have an election, or the population of the world will have an election this year. Macroeconomic is as you say, is somewhat mixed. CPI is very sticky. So rates are going to be higher for longer. We started the year thinking there'd be 7 cuts, then went to 3, and now maybe we get 1 or 2. So I do think those are legitimate headwinds. I think the flip side of it, though, is you've got to look at the things that are positive. There's a tremendous amount of money on the sidelines, both strategic and in the private equity universe. Private equity deals are lower in terms of total. They're up in volume, but the one piece of this market that I think definitely concerns me is, notwithstanding the volume increases, the number of transactions were down about 30% when you look at the quarter-over-quarter numbers. But so I think you've got to look at it that way. The other thing is, I do believe that activism has stayed pretty strong. Admittedly, it's shifted to more of an operational bent,
right,
as opposed to some of the parts, let's do breakups, et cetera. But still very strong, and I think that will be a tailwind.
What about something we talk about every day, AI? And you know, when we do see these transformational types of moments in terms of technology, they can sometimes also lead to companies choosing to do things they might not otherwise do, and/or consolidation. Is that, in your opinion, going to be the case?
I do. Look, I sort of believe with you saw Jamie Dimon's piece on the steam engine, electricity, internet, computing age. I believe this is one of those multi-generational changes that are going to be tremendously impactful. So, and I don't think it's just the producers and the consumers. And I don't think it's just the chips all the way up to vertical and horizontal applications, the application layer. I think you've got to look beyond that to the impact. So, for example, we don't hear as much about how much power we're going to need in this country. That implies a very significant upgrade of the transmission and distribution grid, I mean, potentially hundreds of billions of dollars around the world. When you think about broader electrification, whether it be data centers or EV. So this is tremendously impactful. But IDC says $500 billion plus spending by 27, something like $11 trillion over time economic impact. So I do think this is completely, you know, this really is in that special category of major change. And so what does that ultimately mean? If you think about, you know, the industrial age on, always when this massive change comes, you know, Schumpeter called it creative destruction, you're going to have major consolidation waves. So while I'm a little bit less sanguine on the prospects for this year, I do believe over the next 2 to 5 years, short of major government regulation to stop it, we're going to see major consolidation, and that will be very good for the M&A market.